Welcome to RANsquawk's e-morning briefing for Wednesday, the 21st of October 2009. A quick review of where we are at the moment in the major events, plus as well a recap of the overnight news. Starting off, the Bank of England minutes for the October decision has been one of the main focuses and drivers of the markets this morning, especially in the UK. Just recapping what we saw there, the Bank of England in the minutes showed a vote of 9-0, so unanimous in both keeping the rates at 0.5%, but more importantly, and getting most attention, they were unanimous in the 9-0 vote for QE to be maintained at the current 175 billion ceiling, which of course is coming towards the end of the programme now. So nothing too great out of that actual vote though, and most are expecting the Bank of England to wait until the quarterly inflation report is released in November to give them more of a guide or be equipped with more ammunition to make a better judgment on whether indeed we do need further QE. However, the markets have been somewhat receiving that as a hawkish report. Gilts are down around 100 ticks and cable has shot up around 200 pips, just shy of the 166 handle. A couple of the reasons why the Bank of England did pay note that they saw no need to increase at the moment. They also said that money supply is showing signs of QE success and asset prices have been positively affected by the QE programme, so all pretty much suggesting or opining more to the side of potential pausing if anything going forward. But again, the door is still wide open for the BOE. But as mentioned, gilts are down and sterling is stronger across the board. In terms of other overnight news, I'd just like to highlight for you in the Asian session is Bank of Japan Deputy Governor Nishimura warned that the downside risks facing the country's economy remain high, meaning the central bank must stick to Treasury or its monetary policy for now. Also as well, we've heard some market talk of a potentially stronger industrial production number coming out of China tomorrow. That's coupled with last week's rumours that we saw of a potentially stronger GDP print, which analysts expect to come in at 9%. Both those numbers are due to be released tomorrow. Elsewhere from the US, Fed's Plus has said the Fed should take strict rules-based approach to monetary policy and lender of last resort. Plus repeated that he favours inflation target to anchor inflation expectations in order to guide Fed policy. And Fed's Yellen does not expect tightening to happen over the next several months. Elsewhere, Treasury's Geithner said the Obama administration must stay focused on ways to reinforce the US economy's fledgling recovery, and that the time for tightening the budget will come later. In terms of the various programmes as well, we're starting to see the first indication of some unwinding, with Geithner saying overnight that he'll let TARP Bank Capital Injection Programme expire in November, and no formal discussion yet on extending TARP past year end. Separately, the Treasury is to terminate Capital Assistance Programme and the Targeted Investment Programme by the year end, according to a Treasury official. Elsewhere in FX news, it's worth noting as well, the Kiwi, the New Zealand dollar, has traded quite a bit stronger against its US counterpart. In particular, comments from the New Zealand Central Bank chief, who did say that the fact of a stronger Kiwi will not impede them in raising interest rates in the future, getting the attention overnight. Taking a look then in corporate news, a couple of equities after markets. Yahoo did impress. They shot high in extended hours. Their Q3X items EPS was at 15 cents, higher than expected. Revenues were also a lot stronger and they had a positive outlook, so good for them. And we're keeping a close eye at the stocks open. Elsewhere, Cadbury's had also good numbers. Q3 sales rose 7% versus expected 4.7%. They raised their full-year guidance. Obviously, Cadbury's looking to post as good numbers as possible in order to fight off a potential bid from US rival Kraft. Deutsche Bank as well also surprised the markets pre-market today. They came out and said that they see Q3 net at 1.4 billion euros, a lot stronger than the street estimate of 811 million. They said that all business segments to report positive results. They did initially shoot higher at the very open, but they have drifted now to be one of the biggest losers in the DAX. Has been some market talk that they could have released those early in order to do some capital raising, however that remains unconfirmed at the moment. Elsewhere as well, Peugeot Citroën, the car maker in France, they had Q3 sales of 11.78 billion, which was quite a bit weaker than their previous quarter of 12.76. Their shares were a little lower as well this morning. Overall, stocks in UK and Europe are seen marginally lower. Taking a look then in terms of the calendar, it is pretty light today in terms of US economic releases. We'll have UK CBI Quarterly Industrial Trends Survey, that's at 11 o'clock London time, and then we'll have the weekly NBA mortgage apps at midday. All inventory numbers from the Department of Energy, they're due they're due during market. That'll be at 3:30 London time, so 9:30 in Chicago. That does follow on from the API numbers we saw after the market closed yesterday, which showed a pretty bearish number in crude with a build of just shy of 4 million, so worth bearing in mind. Other than that, Fed's beige book will be due later in the session. Today, though, very much again dominated by US corporate earnings. Some of the bigger, more notable stocks will be keeping a close eye on and may drive the direction of the markets this afternoon. We'll have Morgan Stanley, Boeing, US Bancorp, Wells Fargo and Altria, just to name a few, as well as pharma stock Eli Lilly. And elsewhere in fixed income, we'll reverse auctions today from both the Bank of England in a 2013-2019 maturity purchase, and the US Fed will be conducting their weekly outright Treasury coupon purchase. They're looking to target August 2026 to August 2039 maturities today.